Good morning, guys. This is Ray from Next Forex Trade. Today is the 5th of September 2019. It's 7:40 here in the UK, and I'm here to teach, not preach, Forex. So slightly later than previous sessions today, but it's all good. Let's just have a look at the markets now. Today, we can see from the positions that I've had, I have incurred some losses, and I'm going to be speaking a bit more about how you should deal with losses as a trader and how they're part of the game. So I'll go over the positions that have taken a loss. They were on the AUD/USD, also the AUDJPY, and I'm currently carrying a loss as well. But these aren't things to really be not be worried about. What I'll do first of all, though, I'll start by just having a quick overview of the market, and I'll come back and dig into those at the end of the session today. So let's have a look at firstly AUDCAD, and just a quick recap on the strategy. Basically, 5 different time frames that I'm using here: daily, 4 hourly, hourly, 15, 5. And my first point of reference is the daily. I'm looking for value for money on this, with the price either being overbought in a downtrend or oversold in an uptrend. And I use a standard deviation to help decide how that value for money is determined. So in this upper region here is overbought, above the average of a standard deviation is also an overbought area. So that's when I'm looking for shorts, and it's the opposite when looking for longs. Also look for basic price action, lower lows, lower highs, and also time frame correlation. So I want these other lower time frames to be saying a very similar thing to what the high time frames are saying. So based on that, let's have a look at the AUDCAD. So firstly, there is some interesting price action on here. So we've got lower lows, lower highs in this price action here, a reversal off of the resistance that we were seeing in yesterday's candle as well. So this gives us a good reference point for our stop loss above these type of levels here. It's also in a reasonably overbought area, so definitely bearish on this. Now it's looking to lower time frames to get some indication of how you can enter this, and at the moment the 4 hourly and the lower time frames aren't really quite ready. We can see the 4 hourly here is quite flat in its most recent price action, quite boxy. So we've got these areas of support here, and above here the resistance. So it's in a box, and even though we can still put the standard deviation channel around it like this to say, capture this same move that we were seeing on a daily, really what I would want to see, even this movement's okay, but the problem is at the moment the lower time frames, so the hourly, the 15-minute at the moment, are still really quite bearish as well. So there's still perfectly good premise for a stop above these types of levels, but what I'd want to see on these lower time frames is it to break this support that we're seeing in this. You can deem this standard deviation here, break and start to make lower lows and then lower highs. So we need this to break and pull back to give a nice entry with a stop above these types of levels. And going for profit targets, this is quite viable. An entry based on that would give a decent 1-to-1, an exit around these type of areas, viably beyond that as well, about 1.5 to maybe 2-to-1 reward to risk. So yeah, just waiting for that to happen really. If that does happen in today's session, there is scope for it, but we just need to wait and see really. And let's just bear me one moment. Let's just jump on to the next one. So we've got AUDCHF. So this, for me at the moment, using the approach, this is not great at the moment. It has broken that resistance, and it's still bearish on this because of these moves with the lower lows, lower highs. But the problem is it has broken that resistance. It looks like it's coming up to kind of interact with our upper edge there, which would allow for a better entry. If we see some reversals off of this type of level, so interaction up here, it would also coincide with this previous support that we saw here. Just see if that goes back. Yeah, so this support here, support here. So there's various points of reference to consider taking a position should the price show some reversal candles off of this type of level. But today is what we're on. It's Thursday today. So Thursday, this probably isn't going to be something that's going to be viable this week. So next week, because we need it to come up, reverse, and then look for a move past the low of that. So given today's Thursday, the earliest that could happen to see the reversal candle would be Friday, which would mean the earliest this would be a potential entry would be Monday. So good potential, but not quite there yet. Obviously our lower time frames as well still very bullish at the moment with these price movements here, higher highs, higher lows. So next, same story with AUDJPY. And this was, in fact, let me talk about this now, because this was a trade that I shorted and got stopped out on. So we can see that my entry on AUDJPY, what was the exit price? 71.95. Okay. 71.95. Okay. So I got stopped out at this level. So, you know, hindsight is always 20/20, because now we can see how the price is moving away. But I'd entered without that, let me just, there we go. I had entered with a reasonably good premise that this area here would find resistance. So I had a stop. I entered here, would have been, let me just get the exact entry prices. So this was 71.32. 71 spot. What was it? $3.2. Okay. So sorry, bear with me one sec. Just trying to give the best example possible with this. So spot 3.2. Okay. So my entry was shorting here, and it was quite an aggressive stop because I didn't have it above these previous highs here, but it was still, there was still good enough reason to take the position based on what the lower time frames were saying. So the aggressive, it was an aggressive stop. I had it here, and I was going for a 1-for-1 in terms of reward to risk. Had got stopped out. You can see, you know, had I gone for a more conservative stop above these highs here, then maybe I'd still be in the position. But the problem with that is that the reward to risk would have taken my 1-to-1 kind of to these levels here, which wouldn't be ideal for a few reasons. So this is one that, yeah, I did take a loss on, but it's still, it's one not to fear potentially getting back in on if see the right type of kind of progression in price that we need to see. So what I'd be looking for on this is basically some resistance here. So in today's candle, Thursday's candle, to find some resistance at this type of level, and then on our lower time frames for the price to start showing some bearishness, so lower lows and lower highs there, and we'd have a nice conservative stop above these highs, allowing, you know, for a much, and you can see how that would be a much better in terms of reward to risk, because the position, if I'm able to get an entry here, would be much smaller on a 1-to-1 reward to risk because of where the stop would be. Yeah, whereas before I'd entered all the way down here, it meant, you know, to have that conservative stop, it is much wider, meaning that to kind of extrapolate where the take profit would be, it would be all the way down here. If we see the reversals off of here, move past the low, it would mean my take profits are probably going to be around this type of level. So this is another one to keep an eye on, but not tradable today. Certainly going into next week, there may be opportunities to jump back on this. And just on that, it's really, again, like we've seen here, I've taken losses, but I'm not fearful of potentially entering the market. The market doesn't really care about me or you, and it doesn't have a memory either in terms of how it's treated you before. So if you'd taken a trade that you were feeling vengeance on the market, that, oh no, this has done me wrong, I want to get something back on this, and you over leveraged yourself or just took a poor position, then that's a terrible way to trade, because in the long run you're done for, because that kind of mentality is eventually going to kind of catch up with you. So here, yeah, I've lost money on this, but I'm not scared to get back on this if the opportunity should arise and the setup's good enough. So just remember that even though a trader's done you bad once, doesn't mean that you should be scared of getting into the into the pair. Excuse me. You shouldn't be scared to be getting into the pair again. Excuse me. And also, you shouldn't want to kind of wreak vengeance on the pair either. So those are two things to consider. AUD, USD. Let's talk about this one as well. So this is the other one that I took 2 losses on this, and so yeah. Sorry, I'm not following the format. I said I'd talk about these at the end, but let's talk about them now, because it's in order of the progression through my list here. So this I'd originally entered the middle of August. We saw that the price had gone into profitability, and it has now taken up 2 of those positions at the stop loss. So I mentioned in yesterday's video that I was looking to take some money off the table if the market gave me the opportunity to reduce the 3% risk on this overall. The market didn't give me the opportunity, because we can see that it continued to make these higher highs and higher lows. So 2 of those positions got stopped out, and it came very, very close to taking out this third one as well. It may do it in the session. Whether it does or not, I'm not too bothered. And the trade still made sense. I mean, the structuring of the trade was fine. It's just, sometimes probability goes against you, and just because you're losing in a trade or you've made a loss doesn't mean that you're a loser overall. If that makes sense. So it's taking a loss is part of the game. It doesn't mean that you're a loser overall. You're more of a loser if you decide to, even if you make a profit from a trade that you've just over leveraged in, or you've tried to take vengeance on, or you've done something silly in a trade, then you're a loser even if you make a profit. So this is really one of the important things I just want to hammer home, and just that transparency of yourself, or if you're showing other people stuff, just that transparency to say, yeah, this was the reasons I got into a trade. It didn't go to plan, but I stuck to it didn't go into profit, but I stuck to the plan. And here is an example where I'm just sticking to the plan. I'm not, giving the trade extra wiggle room. I know what my overall loss is on the position, and I'm not moving anything based on that. The only thing I would be moving is take profits if it were to go into profit. Now, you can see as well on this, initially I was going for 2 for 1. So 2 for 1 reward to risk, that is. So I would get back double. In fact, it was a bit more than double of what I entered. So it was about 7.5% potential upside and 3% downside. So when going for those bigger moves as well, realize that they're not going to be as probable. Going for a 1-to-1, I would have made money on this. This was, I was aware coming to these lows here that the price could find some support. It did twice, in fact. So I was in the money more than once on this, but I was staying in for a bigger move. Now you can play that however you want, but just be aware, if you're going for bigger moves in the market is inherently likely that it's less like, less like, excuse me. Sorry, going in a coughing fit there. Excuse me. About that. Sorry. I had to put myself on mute there because I went into a massive coughing fit. Where was I? Yeah, so inherently going for bigger moves in terms of how far the market could go is going to be, yeah, really sorry about that. That must be horrible in your ears. It's going to be less probable. 1-to-1 reward to risk is going to be more likely to happen. You're more likely to hit that profit target. But it's all a game of probability. What you don't really want to go for is too many trades, or don't go for trades at all where that probability isn't stacked in your favor. So if you're risking, say, constantly risking 1% overall to gain maybe, a tenth of a percent, so you're risking £100 to maybe win £10, whatever your currency is, that's a strategy that in the long run it won't stack up, because you've basically, even though you're maybe gaining £10 from every trade with those numbers, it takes one loss and you've got to get 10 times that to make it back. So just understand what trade expectancy is, what probability is, and just focus on that on your trading stats. Just constantly look over your stats to see how that's stacking up. But on this one, the way I'll manage this at the moment, I'm still actually quite bearish on this. It really depends on how this candle ends today. So I'll be keeping an eye on this, and because there's still one position in this, it may be one that I in fact add to again, depending on how that reacts on the resistance today and how our lower time frames start to move as well. So this may be one that I in fact get back into, but again, it's just a case of not being scared of what the market's done to me previously, and just not holding any grudges against it. So if the price action's there, it's tradable. So that may be one to come back to. CAD CHF, no, that's no. I mean, there's some good signs here of it being overbought, but this has breached our standard deviation, which is okay, but I'm looking really for a reversal candle. So this needs to wait. A lot of these seem like that today, so just need a bit more information. No, I want this candle to close to give confirmation that this is a lower high. So yeah, it's I'm definitely bearish on this, but I just want to see a better confirmation on the daily first of all, and then consider looking at the lower time frames. Bear bullish, but no, I can see that this isn't near enough to its oversold area. I mean, you can just see that in the price, but if you want, I can put the standard deviation around it and you'll see that it's not near the lower edges of yet. So it needs to come nearer to here and start to show signs of reversal, and obviously our lower time frames are still very bearish. No, this is just flattening out, too much support here, so I'd be bearish on this, but I'd want to see it to break this support first of all definitively on the daily. I mean, it looks really nice on the lower time frames, so I mean you could no, I would say yeah, the daily is the problem here. Similar story here, daily very flat at the moment, although overall very bearish. Is hitting a lot of support, so wait for some value. EURGBP, bullish on this. It's you know, it's still interacting with our standard deviation channel here. The problem at the moment is still all these time frames are really flat. Sorry, all the lower time frames are very flat, encountering support. I would want to see some clearer signs of bearishness first of all, so that would require, in today's market, this candle not really to move much lower, and to see signs of bullishness. So this is probably another one for next week. Having said that, if that does break this in today's market, that would give more context to this move. Or if we look on the 4 hourly, well, you can see this here. So then this becomes more of a play. So it kind of coming down here and be looking for value for money to short this, should the price then come up and interact with our upper edges of our standard deviation channel. But wait and see, really. No. Euro. Not today, but just seeing what we need to see. Yeah, so for this to pull back to give a bit more value for money. So that's again probably next week. No. So what I'm evaluating here is we've definitely got a nice clear sign of resistance here, so stop above these levels, which is outside of this resistance that we're seeing, this previous support above our standard deviation channel. Let's see how significant that level was. Yeah, so there's previous areas of here as well, zonal support and resistance. So this is a good reference point for our stop, but the problem is for me how far away this candle is to allow for even a 1-for-1 reward to risk, because it would need to be all the way above these highs here, and this price action isn't great on the lower time frames as well. Yeah, it's readable, but it's just the distance of where the stop would be on this. Really it isn't great. It would put, so that's about 240. Let's call it 240. It would put a 1-to-1 take profit bang on or near enough the previous lows, which I prefer not to do, because as I've mentioned in other videos, as it approaches these previous lows, it has a tendency to bounce or it could break. But I prefer being able to take money off and making that decision before it approaches those lows. And this just wouldn't offer the best value for money for me at the moment. Next. No, it needs a reversal candle as it encounters this resistance. So no, same thing. I would like to see it encounter this resistance here and then start to show lower lows and lower highs on the lower time frames. It's not going to be this week. This would be I'm going to say no on this, but it's interesting because this is basically kind of an extension here. It hasn't pulled back, so this hasn't got your typical, if you look at the 4 hourly, it's more clear that you've got lower lows and lower highs, but on the daily, that trending movement, lower lows and lower highs, is really just one extension move. And when the market moves in kind of extensions and then retraces or pulls back, so my hesitancy of shorting this, although there'd be reasonably good position based on the 4 hourly, so stop above this previous lower high here or this level here, it's not really as sound on the daily. So I would say no, but yeah, I mean, if it were something that we're going to trade, it would probably be this is how you could allocate your risk differently depending on what the price action is saying. So rather than a typical 1 to 3% that I would consider in a ideal setup, this could be something that you look to do, because not all the stars are aligned. Your options are leave it, which is probably the best option, or look to trade it at 0.5% to 1%. So the play would be basically looking for a stop loss above these previous highs, so above these levels on hourly here. I would wait for a break of this level here on the lower time frame. So wait for it to break that. Use the standard deviation channel to assess value for money. So after it's broken, wait for it to pull back to either the average or the upper edge here. Stop above there, and you'd have an entry which would have you take out a 1-to-1 reward to risk before these types of lows. So before these types of lows here. But again, slightly riskier in my opinion. What's this? NZDJPY. No. 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 Want this candle to close first. So maybe tomorrow, it being a Friday, I'd be paying attention to what the swaps are on this as well if it were something to enter, because there's a good likelihood of having to hold it into the next day. But it's all conjecture really until seeing this day close. So no. And Bitcoin, so still bullish on this. You can see it's encountering some resistance actually. Again, don't trade Bitcoin, but some people do, so this is just an overview here. So my suggestion, if you look through the earlier videos from this week, was taking a long position on this with stops below this level. And we can see that currently from yesterday and the day before, it's encountered resistance at these previous highs here. So definitely is a longer term play. The stop below this level still absolutely makes sense. It may have some trouble overcoming this level, but certainly if it still stays, above these previous lows and within our standard deviation as well, there could be some nice signs of bullishness to these types of highs or beyond to these types of highs. The hourly, the hourly's still looking quite bullish as well. So yeah, Bitcoin, we'll have to wait and see on that, but yeah, bullish overall. So yeah, I hope that's been of some use. Again, I think the main takeaway from today is just don't be afraid to show your losses. Don't be afraid to show your losses. They're more important than the wins, I think, than the profits. It all depends on how you've come into how you've dealt with the trade by trade. So hopefully that's been useful. I will see you guys again tomorrow. Thanks a lot.